it's really quite murky. It's very difficult to untangle what's going on in modern financial transactions, to be fair to everybody. So that gives a little bit of coverage to the financial institutions as well as to the people who find themselves in awkward situations of debt. It's very difficult to actually analyse and isolate what component of modern loans is usurious and what component is legitimate lending. And some people try to blur the distinction between the two, and they think, well, it's just about the interest rate, you know. A good loan is something with a low interest rate, and a bad loan is something with a higher interest rate. Well, unfortunately, it's not quite as simple as that, because usury can operate with a low interest rate. Usury is about the principle of lending money for an unproductive purpose and charging interest. So it can happen with any interest rate. That needs to be understood. But, you know, very often with credit cards, if the person hasn't been screened, if they are not responsible borrowers and they pay back the credit card is merely a plastic convenience that is used for certain transactions, but it's not going to accumulate debt. If a person pays it off as soon as they incur the debt and the credit card is kept down and so interest doesn't kick in and apply, it's like a snake handler that knows how to handle a snake without getting bitten. It's like a crocodile handler who knows how to handle a crocodile without the jaws snapping his hand off. And if you can undergo the discipline of even not having a credit card, that's fantastic. But the way the system is geared today is that if you want to buy certain tickets or certain things online, some businesses and agencies and merchant facilities insist on credit card transactions. So you either have to have a credit card for use in those situations, or you have to know somebody who's got a credit card who can do it for you, and then you can pay them back the cash immediately. So that's another complication of modern finance. If you want to know the status of modern financial loans, and this is addressing the questioner's question, then you have to be able to analyse it down. What is the money being lent for? Is it a productive or an unproductive purpose? And then appraise it accordingly. Or if it's a home loan or a car loan, banks do have a lot of regulation and compliance that they need to heed. They need to make sure that a person, you know, is earning an income and is able to service the loan and so on.
They're sound.
Yes, but we know that before the 2008 financial collapse, with these low doc loans, you know, these dud mortgages, these questions weren't answered. And what's more, in the securities market that developed from these loans that were sliced and diced and repackaged and offered as investments, and then the rating agencies actually rate them with a, you know, triple, you know, 3-star rating as, you know, premium securities. This is all smoke and mirrors. It's a disaster waiting to happen. That's why there was a huge collapse associating with the housing market, with the mortgage market, which is one of the big areas of debt finance.